My name is Muhammad Mizan bin Azuddin and my metric number is A22B1018. So why income basis? Choosing an income basis method, whether in accounting, taxation, or business valuation, is driven by several factors. The selection of the specific method is influenced by the nature of the business or transaction, regulatory requirement, financial reporting standards, and the information need of stakeholders. Here's are some key reasons why choosing an income basis method is essential. So the first one is accurate financial reporting, reflecting economic reality, and a prorated income basis method ensure that financial statements accurately reflect the economic reality of a business. This is crucial for providing stakeholders, including investors, creditors, and management, with a true picture of the company financial performance. Number two is business valuation, informed decision making. When valuing a business, selecting the right income basis method is crucial for making informed decision. Investor, buyers and sellers use income-based valuation method to understand the potential return on investment and assess the intrinsic value of a business. So the last one is cash flow management, effective decision making. For business, understanding the timing of cash flow and outflow is critical for effective cash flow management. Choosing an income basis that aligns with the cash flow pattern of the business allows for better decision making regarding expenditure, investment, and financing. In summary, choosing the right income basis method is essential for financial transparency, compliance with regulations, and informed decision making.
Assalamualaikum and hi. My name is Ni Muhammad Farish Dania bin Muhammad Arif Faisal. My metric number is A22A0928. Why asset basis? Companies often use asset-based metrics to evaluate their performance because assets represent it represent the resources a company has at its disposal to generate revenue and achieve its objective. Asset can be tangible, such as building, machinery, and inventory, or intangible, such as patent, trademarks, and goodwill. The first reason is resource allocation. Resource allocation is the creation of commodities and services depends on asset. Through the evaluation of asset utilization efficiency, businesses may determine whether their resources are being deployed in the most effective manner to yield the highest possible return. Next is investor and creditor confidence. Creditor and investors frequently use the asset base of a firm to assess its financial standing. Since assets can be utilized to pay liabilities in the event of financial difficulties, having a strong asset position can provide one a sense of security. Last but not least is liquidity and solvency. Asset-based measurements, including the quick ratio and current ratio, are useful in evaluating a company's short-term liquidity and capacity to pay its bills on time. This is essential to the continuous operations of the business. Next is why cash flow basis. Company use the cash flow basis to evaluate their performance because cash flow provides a more direct and tangible measure of a company's ability to generate cash and meet its short-term and long-term obligations. Cash flow reflects the actual movement of money in and out of a business, capturing the liquidity and financial health of the company. Here are some reasons why companies are use cash flow as a basis for performance evaluation. Firstly is working capital management. An understanding of cash flow is essential for effective working capital management. Businesses can enhance total cash flow by optimizing inventories, accounts receivable, and accounts payable by keeping an eye on the cash conversion cycle, which measure the amount of time it takes to turn raw supplies into cash from sales. Second is debt servicing. The ability to pay off debt is essential when determining a company's capacity to pay back capital and interest. Lenders frequently consider its cash flow. A company's creditworthiness can be improved by having a steady and robust cash flow. Thirdly is investment and expansions decisions. Cash flow analysis is a common tool used by businesses to assess the viability of capital projects and development strategies. A corporation that has positive cash flow from operations activities can finance its expansion plans without depending entirely on outside funding.
Assalamualaikum and hi, my name is Muhammad Danish bin Muhammad Yunus. My metric number is A22A0965 and today I going to present about performance on 3 years onward for Petronas and Shell. The performance of Shell and Petronas during the next 3 years is probably going to be impacted by possible strategy action like a merger and acquisition. According to the document, combining the two business might result in higher dividend growth rate, better financial result, and more advantageous market positioning. Furthermore, the benefit of a merger such as improved R&D, increased brand recognition, and expedited market entry may support the long-term success of both businesses.
Hello, my name is Muhammad Irfan Sufi bin Muhammad Gara Anwar and my metric number is A22A0897. I am the financial accountant of Shell. Today I would like to present the possibilities of merger and acquisition between Shell and Petronas. Before I start, I would like to briefly explain what is merger and acquisition. A merger happens when two companies decide to come together and form a completely new company with new owners and managers. On the other hand, an acquisition takes place when one company buys another. In our case, both Shell and Petronas are growing companies, and it seems like merging could be a good move. The idea behind merging is to create a more effective way of managing things together. When we look at the value of our assets after taking away our debts, both Shell and Petronas show that they have a lot of value. Other financial checks, such as cash flow and PE ratio, also indicate positive results for both companies. This means that if we decide to merge, we might be able to attract more people who want to invest their money because they see a possibility for growth. The main reason for considering a merger is to increase the amount of money we make and com- combining the efforts of Shell and Petronas. There could be a chance of earning more in the future. However, it's important to think about whether the values stay positive and if the two companies will work well together. Conducting truth research is crucial to identify and solve any potential problems that might come up during the merging process. Moreover, in addition to the positive outcome seen in the net book valuation, there are encouraging results when applying the cash flow basis valuation method and dividend valuation method for both our company. Furthermore, the calculation of the PE ratio under the income basis valuation method also yields positive value. It's essential to note that the PE ratio serves as an indicator of the growth investors anticipate from the companies they choose to invest in. The Shell and Petronas carries the potential to create an entity that is not only financially robust but also appealing to investors. As mergers and acquisition primarily aim to enhance profitability, the positive outlook across the financial metrics suggest that a merged Shell and Petronas could achieve greater financial success. This alignment in financial strength and growth potential further solidifies the argument for the viability and potential success of a merger between Shell and Petronas.
Hello, my name is Mohammad Afilmi bin Jalani and my metric number is 822A0951. For my part is advantages and disadvantages of the acquisition for Shell and Petronas. For advantage, both companies can enhance technology development by combining research and development (R&D) to hasten the development of carbon capture and greener energy technologies. Next, result in considerable cost reductions. These ways, both companies can reduce costs. Lastly, Shell and Petronas could leverage the strength of both brands, creating a powerful and recognized global brand. Disadvantages of acquisition for Shell and Petronas is employee concerns, which may result in job losses and unhappiness among the employees. Next, merging can be costly and disruptive, resulting in financial losses. Lastly, can reduce competition Lastly, can reduce competition which might raise consumer prices.